Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having an amazing day. We're going to take another look here at Bitcoin, see what's going on, of course, help you understand, best practice and big picture, and well, kind of just see what happened yesterday, of course. I wouldn't say we got wrecked, but all the profits were taken at almost, the exact same time. So it's an interesting situation when this happens. Unfortunately, a lot of manipulation is going to, continue to occur like this, and this is kind of par for the course. So I hate to say you get used to it, but it's really just the bottom line. Either way, if you're new to the channel, I'm not a financial advisor. I love teaching people to trade. Hope you can learn something today. If you want to become a better trader, CryptoCache.tech is the website, link in the description below. I'd be happy to help you become, well, a better you. It's really just helping people to become more consistent. I have a Signal group, Trading Academy, and community. We all learn and grow together. Today we have our weekly roundtable discussions. It's really a lot of fun. Take a look here, though, at Bitcoin. Here's what's going on. First of all, it sucks, and I'm sorry to laugh. It's almost like this nervous laughter, like, oh, it happened again. Anyways, when we look at the smaller time frames, and I'll show this to you in a moment, you'll see just like a straight downtrend immediately within 1 or 2 hours as soon as 5 o'clock strikes. And that's 5 o'clock Pacific Standard Time. That's basically when the candlestick closes. So essentially this candlestick opened just bright red, if that makes any sense. So that's the reason why you see the whole market kind of getting impacted. In fact, why don't we take a quick look at Bitcoin dominance? You can see it's coming down as well, which is interesting, basically just implying that some of the volume is coming away from Bitcoin and going into some altcoins. It also tells us too that we had a significant wipe, and the simple fact of the matter is that Bitcoin got hit pretty hard, and obviously the dominance is going to come down when you have so much selling pressure. Okay. Again, it's important to look at Bitcoin dominance. It's not a bad thing that it's coming down. It's actually a good sign. That's usually what triggers alt season, if there was to be such a thing. But for now, that's essentially what we're looking at there. Just to kind of throw that out there. And, kind of starting where we normally start, of course, with the monthly, we can see we're starting our third month, of course, in the red. It doesn't imply that we're going to see a bunch more, but we should expect at least 1 or 2 months of redness. That's my estimate, my guesstimation, just based on the simple fact that in the past, we've seen the 50-day SMA tested, and of course, when the price is under 50 on the RSI, it stays under for roughly 6 months. Now, there's no guarantees it's going to repeat that same behavior, but that was almost 4 years ago, like 3.5 years ago, and it's kind of fulfilling its 4-year cycle in a sense. All right, so it's generally what we're looking for and expecting is a lower price point, possibly in the low 20s, so 21 to 22,000. Looking at the weekly, we can see the same thing. The 200-day SMA is working itself out to 22,000 essentially, right in that same exact range. So while it's all well and good that we've, where the price is going sideways, kind of in a range right now, there's a strong chance we're probably going to see a continuation down. Another thing to note too is this descending pattern, which is essentially concurrent with the 50-day SMA on the 1-day. That is essentially telling us that the price is still stuck underneath that. In other words, if we can break back above over the next 2 or 3 weeks, perhaps we have a chance or a leg to stand on to retest 33, 35, 37,500. Some of these key level resistances that are marked here on the chart. Okay. The current support, though, keep that in mind. The price is trending right here at 29,800. That is a previous support level where the price wicked down and it was a 1-day candlestick close. So if we look at the 1-day candlestick closes on the daily, we can see here 29,800 is essentially the lowest point at which the price went previously. Now, granted, we've wicked below, we've closed below, but the bottom line is it seems to be averaging itself out there. That seems to be the current, I guess you could say, channel that we're in right now. Okay, so again, channel of 29,800, upwards of 31,800. So essentially a $2,000 range where the price is currently range bound. All right, so just, again, something to recognize is a lot of folks are just buying the dip and selling when it gets to a higher point. We've effectively done the same thing a couple of times already. All right, so we caught yesterday's avalanche trade, we caught yesterday's Bitcoin trade, and of course, trailing stop losses targets hit, and of course, got stopped out, but took some decent profits beforehand. So pretty standard stuff, though. I mean, this is kind of like this rinse and repeat thing. So hypothetically, at this point, taking a long position, could and likely should continue back up to eventually retest this resistance. That's essentially what it's telling us. Now, is there guarantees it's going to happen? No, definitely not. The fact that we wicked down below isn't a great sign. We want to see where the 1-day candlestick closes today first. I think if it closes close to where we're at right now, probably going to expect some downside. That's kind of the just general understanding there. Either way, let's look at some standard stuff. We can see we got 50 on the RSI, straight rejection from there as well. Again, that's concurrent with this resistance level of 31,800. So 31,800 is a very strong resistance area in which the price is unwilling to pass that point. Okay, so the bears are like, no, 31,800, we are selling, taking profits. So significant selling pressure at that point. There's also a decent amount of buying pressure right at 29,800. So again, that's where this channel is created. But the bottom line here is that we have a significant level, a line in the sand on the RSI telling us that, hey, we are not willing to let the price go anywhere below, anywhere above this level, okay? So what that basically just means is the price should, continue to progress lower based on that simple sentiment, because as the RSI retests this level and keeps getting rejected, it'll continue to work its way down lower. Okay, so I would say the inevitability is to come down lower, not only because our larger time frames are telling us that, but we also have this relative strength or lack of strength at 50 and it's getting rejected consistently. So even though we have this ascending type of pattern here, you could say, because again, I drew this out recently with the fact that we are making higher lows on the daily, it's all well and good, but until we can make another higher low, I think we don't really have much of a leg to stand on. So I would say that we're in this position right now where unless today can close much higher, I would say at least 30,500 or higher, then we're going to have some kind of problem, or more so just continuation to the downside. That's what we should expect. But again, 20-day SMA is working itself out to be the average right there at that trend line. So ultimately, it seems like the price is going to be range bound for a little bit longer until it retests some of these levels. So for example, it might retest this level here, get rejected. It may break above and inevitably continue higher based on the fact that we broke above that resistance level. But the more often you test a resistance, the more likely it is to break. The more often you test a support, the more likely it is to break, right? So we're pretty much retesting both these levels multiple times. So it's an interesting little game that's going on right now. And I say game because you look at this here, this 4-hour candle. In fact, why don't we just jump right to the 1 hour so you can kind of see what it's talking about. Look at this, 1700, which is 5 p.m. Pacific Standard Time, or well, maybe 4 p.m. depending on your time zone. But generally speaking, right before or as the candlestick closes, we see this significant selling pressure, tremendous amount of volume, price comes down, drops by 2,000, and effectively consolidates right here at this current support level. Okay, so again, it's unfortunate when that happens, but that's pretty standard, par for the course. It was basically these exact same folks here buying the price up here and selling right at the highest point and coming all the way down, and then rebuying again here, and they're going to rinse and repeat that action. It's a pretty common practice, unfortunately, and it's terrible that they have such control in the market by having that dominance in that regard, that they can affect the market in that way. So, again, it is what it is. You can't really change it. Just learn to deal with it, or maybe crypto isn't for you. Sorry, it's probably always going to be this way, unless there's some kind of government, sanction that comes into place. Anyways, yeah. So that being said, let's go ahead and summarize with the 4 hour and kind of call it a day here. Maybe even look at the 1 hour too. But we can see a rejection off of 70 in the RSI. That's also an indication telling us that the price could have reversed at that point. Because again, breaking above 70 on the RSI is typically disadvantageous. Anytime you see that happen, there's usually a strong sell-off to follow. But in this case, it just hit 70 and came back down. Okay. So again, that has nothing to do truly with everything here. That's complete manipulation in this 1 hour time frame. But again, on the same accord, there is some truth here in the sense that, hey, 70 on the RSI worked as a resistance, price came back down. We also see this MACD divergence as well, which obviously makes sense considering the fact that there's so much more selling pressure, price coming down. So, inevitably we could see the price switch back, but I wouldn't expect the price just to ramp right back up immediately. A lot of times it'll spend a day or two before it kind of recovers and builds enough strength. We saw this here over the weekend. We've seen it here previously where, it just takes a few days to recover. So I wouldn't expect the price to shoot back up to 32,000 today. Although I do anticipate it being retested again, perhaps, or 31,800 in the relative near future, it still doesn't look like we have that kind of option at this point. It doesn't look great. We can also see there is an increased amount of volume here so far in this 4 hour candle that hasn't closed yet. That is a good sign. If we can continue to maintain that volume, we might see the price increase. But again, without volume, it really doesn't tell us too much, or we can't really anticipate much there. With volume, see what the volume profile I mean, that's pretty much right there. So every time the price comes down, the most amount of volume that we've seen here, again, this is really just a smaller time frame. This is roughly about 2 weeks worth of trading. But in the last 2 weeks, we've seen the price average itself out for the most amount of volume at 29.5. So there's a nice amount of support in that regard if you want to think about that. So likelihood of the price just shooting straight down from here, I think, is pretty low. It's probably going to be a slower bleed, but generally speaking, with the strong amount of volume at this price point, that's a very helpful indication telling us that we got a nice decent amount of support, and you can kind of confirm that. I mean, you can almost draw a straight line, this line right here telling you where the most volume is, right at the point in which the price is no longer willing to go any lower. I mean, look at these candlestick closes, they're almost identical. So again, that's a really cool thing to kind of identify, and the simple fact that you should be pretty safe with a long position that has tight profit targets. Okay, so try not to get super lofty and go like, oh, 33,000 is my first target. No, your first target should be 30,500. Second target should be 31,000, maybe 31,100, and work your way up. Okay, that's essentially how you do it. And that's how I send out my signals too, honestly. I always have usually in the range of 3 to 5 profit targets, a stop loss, trailing stop loss that adjusts when you hit your profit targets. So when it comes back down, you don't lose all your profit. It's a really awesome situation. It's really fully automated. So be sure to check that out in your own time. But regardless of that simple fact, that's how you should structure your trades too, right? Just kind of throwing some friendly advice out there. If you're not setting multiple profit targets and a stop loss, as well as maybe even a trailing stop loss, you're not doing it right. And again, I'm not one to talk. There have been some trades that I've taken recently that do not have a stop loss, but it's mostly based on the fact that we are range bound, and it's almost there's no point in getting stopped out if you know it's going to come right back to that break even point, which right now we can identify as 29,800, or just say round number 30,000. So 1 hour chart, let's go ahead and just summarize here. We're back underneath the cloud, obviously. It's going to be a little while before we're back up above, unless it just continues to go on a tear here. But once again, even though we've seen a decent amount of volume in the last 2 or 3 hours, I would not expect the price to just shoot right back up to where it came from. If it does happen, great, of course, obviously, but there's a lot of indications here telling us that, hey, if you got a short position, that window of opportunity might be closing, but that doesn't mean that you just want to take a long position because of it. Once again, if you're range trading and you're trading within this range of 29,800 and 31,800, then of course that would be perfectly fine. Just know there are some risks where the price could eventually break down, but we do have a decent amount of support based on volume over the last 2 weeks in the range of 29 to 29,800. Those are great things too. So again, there's mostly positive sentiment here. Try not to let this, cloud your judgment or make you feel upset in any way. This is just completely normal. Greed is real. It's just a real thing, and you gotta be on board with it. And it sucks, I know, but it's just kind of par for the course. So what we should expect moving forward is probably just a slow incline to potentially retest 31,800 and then kind of go from there, because a lot of stuff's coming to a head here. We got this ascending type of pattern that's formed. We've also got this descending pattern we're trying to break away from, but we haven't yet. So once again, the micro does still look bullish. I wouldn't say very strong bullish, but definitely stronger than the bears in that sense right now, because they're facing a lot of buying pressure at 29.5, 29.8. And I think we should expect the price to probably go sideways or up from here. It does feel like it wants to do that. So again, if you're going to take a position, just make sure tight profit targets are in place, and you're not overextending yourself. Use small amounts. There's nothing wrong with a smaller trade. Try not to feel like you're missing out. It's a very common thing in the industry. That being said, anyways, I hope this made sense to you here. We're looking, again, not great, but not terrible. It's not as bad as you might think, considering how much red we see in the market. It's not really that bad. It's just, unfortunately, really standard. I hate to use the word manipulation loosely, but it really is what that is. Because there's no way, think about this, there's no way that people like you and I get together and sell millions of dollars worth of crypto at the exact same time. There's just no way. Okay, so obviously somebody is controlling the market, and they're always, in most cases, they're working together. There's a lot of them that actually work together and effectively control the price. So it just really sucks that some of us kind of get caught in that mix. So the thing you can do to protect yourself is to just, well, first of all, smaller position sizes. I know I talk about that a lot, but especially if you're using leverage, use small position sizes, and then also, have really loose stop targets in place just in case something like this happens. I mean, a 5% correction from Bitcoin, if you're trading altcoins, that literally needs to be 15 to 20%, because some of these coins are getting hit hard. Like OP got hit really hard yesterday, a handful of others, of course, but generally speaking, a 5% correction in Bitcoin is really going to shift the numbers. So either way, okay. I hope you learned something here today. If you did, comment below. If not, that's cool too. CryptoCache.tech is a site if you want to become a better trader. I do have discounts for third world countries. And of course, I also offer discounts for military veterans. Thank you very much for your service. All right, we'll look forward to seeing you in the next one. Have a great rest of your day. Take care.